CNBC TV18 is celebrating its birthday week. And speaking of celebrations, one has to think of Indian hotels. Besides the fact that we want the best corporate guests on the channel this week, the big reason to invite Indian hotels is that the hotel industry has had a super October because of the World Cup, according to data we got from HVS Anarock. That's an industry data company. Revenue per available room jumped 27%, says Anarock. More important, the CAIT, or the Confederation of All India Traders, says that this winter there will be 35 lakh weddings, which is 7% more than last year, and the expenditure on them is expected to rise by 27% to 4.74 lakh crore rupees. To give us an idea of how busy is this season, I have with me Puneet Chhatwal, Managing Director and CEO of Indian Hotels. Good morning, Mr. Chhatwal. Always a pleasure having you with us, especially when it is celebration time. Before I come to this celebratory months, November to March, how was October? Is it, 6%, 10% better than a year ago because of the World Cup?
Good morning, Latha. I think it'll be fair to say that every month has almost seen a double-digit increase over the last year. And I see no reason why this should decline. Depending on what your portfolio is, how it is spread, it would be fair to say that for the sector, we're witnessing at least a 15% increase in revenue over last year. So the figures given to you by HVS Anarock on RevPAR are accurate also accurately reflect what is happening within our brands, and depending on the base that you're coming from. So once the consultants do it across the entire supply, so 27% across entire supply is good, but some of our brands like Ginger may show 25% increase, Taj may show 15% increase, but coming from a very high base. So we are very pleased with the way revenue has evolved and the results we have declared in Q1 and Q2. In the interim, November is also finished at a very positive note, and the business on the books in December is also trending higher than last year, which was a great December.
Okay, well, that's what I was coming to the November, December, and for that matter, even Jan, Feb, March, which is really the big wedding season in India. And this data from CAIT indicating that it's going to be another 27% higher in terms of expected expenditure, sorry. What's the scene for you, both with respect to December and the fourth quarter? All booked out, and are rates also higher in terms of the wedding demand?
Latha, the rates are trending approximately 17% higher across our portfolio for us. We are very booked out in certain locations, Rajasthan, Goa, Mumbai, Delhi. This is also because of a lot of events that are happening. Jio is hosting a lot of events in Mumbai. Yashobhoomi is getting new events like the investment conference. The auto show is happening in Pragati Maidan. So we see a lot of business going back to the way it used to be. That means booked in advance. And obviously, we are picking up a lot on the short term because of the holiday season, because of the wedding season. And as I said before, anything between, depending on where your portfolio is, which brand within the portfolio you speak about, anything between 15 to 20% on the top line is pretty much a safe bet.
Okay, no, I agree with you, because we did our India Business Leader Awards and we didn't get Jio, nor did we get the Taj Ballroom, because they were all booked out. I can understand, the lack of availability of rooms. Speaking of Ibla, one of the big chatter among the guests is that there is no room available for any holiday destination. So can you tell us something about tourist arrivals? In my last visit, Ajanta Ellora last week, I saw a lot of foreign tourists, and not just English speaking. There were a lot of them, foreign European tourists, not speaking English. But what's the demand in tourist locations?
We are getting close to the pre-COVID level. We are still not there because statistics, sometimes can mislead you. This is the year of G20. A lot of delegates came into India. They're counted as foreign tourist arrivals, but that is like a one-off. So there is still room for growth in the foreign tourist arrivals, and that is beginning to happen, especially in Delhi, Mumbai. These are the main airports you come into besides Bengaluru. And then you have Rajasthan and Goa being, still ranking as the top destinations where the tourists are coming, and they are actually combining a lot of business with leisure. So there's a lot of interest. And as your channel keeps showing, it's the economy, it's the impact of the aspiration of 7 trillion in 7 years. That is taking charge from the interest from a lot of foreigners coming into India, and we are seeing that a lot.
Okay, what's the sense in terms of margins? If I remember right, you did 28% in the first quarter and almost 25% in the second quarter. Will second half be better?
Always. Q3 is the best quarter, Q4 is the second best. And, this sector, actually, if you look back historically, 20 years, 30 years ago, we always were happy if there was a break even in these first two quarters. So both the quarters 1 and 2 have been record quarters for us also versus last year, which was the best ever Q1 and Q2. Now this year has been better than last year. Q3 is trending in a similar way. Unless something dramatic happens in the next 3-4 weeks, I see no reason why Q3 should not be all-time high. And the margins are really the best in Q3, followed by Q4.
Okay. That's good to hear. All-time high revenues for Q3 and Q4 likely to follow suit. Well, I wanted to speak about capex. Now, what this Anarock data indicate is that from FY23 to FY28, the demand compounded annual growth, CAGR, is 7.4%, but the CAGR of room of supply is 6%. So it looks like the demand-supply gap is widening in favor of the hoteliers. What are your capex plans? Would you want to take advantage of this gap?
Well, Latha, we have communicated very clearly our strategy of under Avant 2025, and the majority of our growth is coming through fee-based business. But like we have always historically done, we are also building new destinations. The last one that we did was Havelock in Andamans. We've just opened the flagship Ginger on the you see it very close to Santa Cruz, Villepale on the main road.
Yes.
Which has just been launched like 10 days ago, which we built with our own, own cash. And then also we are building new destinations like Lakshadweep. We're also doing a Ginger and a Vivanta in Ekta Nagar, which is where a Statue of Unity is. So I think selective investments which are strategic, which help in nation building, we will continue to do that. That has been the tradition of our company, but as well as the Tata Group. So I think some of that will keep happening, but the majority of our growth will come through fee-based business, or when it comes to brands like Ginger, will be through operating leases.
Okay. You told us what we know from analyst meetings, 15 hotels lined up for opening in H2 FY24, 82 lined up for opening until FY28. That would be about 11,000 rooms, is what you told us. Going by the demand-supply gap, will you want to increase this?
We are always happy to do more and happy to do both organic and inorganic growth. I think if somebody would have said a company which is celebrating not its birthday this week, but the following week, Taj will be celebrating 120 years. On the 16th of December. We have actually signed and contracted 140 hotels in last 6 years. And by 31st of March, we would have opened 72 hotels in 72 months. I think that speed was, nobody would have thought would have been possible, and also to absorb it profitably. So most of our new openings are also trending at an EBITDA of the average is across the portfolio is higher than 30%. So I think all in all, we are very pleased with the growth. Growth is a fundamental and a strategic part of our strategy. And it's not just growth in number of rooms, it's also growth in other brands. We introduced Homestay with Ama. We introduced Qmin as a QSR and home delivery. We have brought in many new food and beverage brands. The latest one is the Captain Cellar, the kind of a European vinotheque at the Taj Mansingh in Delhi. And you will see a lot of new additions in your own city of Mumbai.
Okay. Any update on Sea Rock?
Well, I'm happy to share that that we have received the fire NOC, and at a recently concluded conference of the which was held at the Hotel President, the government representatives declared that as a part of the Maharashtra's $1 trillion aspiration or ambition, they have taken an approval for a certain number of projects, maybe 10 or 14, I don't remember the exact number. And Sea Rock happens to be one of those. So all in all, this development is also beginning to look positive for us. But this is like happened last week.
Okay. Well, point taken on that. Mr. Chhatwal, it's the economy. So I was looking at the hotel industry, really. I haven't even touched on religious business. Religious business itself is booming. But I just wanted to take time out in terms of your own ROE compared to, say, a small rival like Lemon Hotels, like Lemon Tree. You know, their ROE works out to 24%. Yours works out to about 16, 17. So is there something internal that you're doing to improve ROE?
Well, I think you have to look where it was 5 years ago or 10 years ago. And from looking at that, the rate of growth in our ROE and on our return on capital employed is very significant. And also, you know, Latha, you don't always take a percentage to a bank account. It's the absolute amount. And we posted 1,000 crores profit after tax in the last financial year. The way things are going, we should match or exceed that number easily. And we don't have debt. And we have cash reserves. And we are very well positioned in terms of all metrics. So I think percentage level, as I said, it depends what base, what business. And instead of Lemon Tree, if we just did like Ginger, things would look very different. If we would look at Ama, which has no capital, upfront capital investment, or Cumin, the ROE number would just go through the roof because it may not be even possible to calculate it. So I think it all depends on the assets you come from. And our strategy that we have communicated is to remain the most iconic and most profitable company from South Asia. And you cannot be most iconic if you don't keep investing into your Lake Palace, into your Taj Mahal Palace in Colaba, which is a temple of hospitality. So I think that's very important to see what your portfolio is and compare, I would say, lemons with lemons and oranges with oranges.
No, I take your point entirely. I wouldn't want Indian hotels without the Taj at all. We wouldn't want you to be just a business hotel. Lots more to discuss. I'll take a rain check from you for another chat another day. But good to hear that business is booming, both in Q3 and Q4. Thank you very much for joining us, Mr. Chhatwal. And in case I don't speak to you, have a great 2024.
Thank you. Thank you. And all the best to your channel on your birthday.
Thank you so much, Mr. Chhatwal. We wrap up on Bazaar on that high note. Chartbusters up next.
Stock market, huh?